Hi all, welcome to Navya Markets Limited. Pantaloon Retail is our latest buy call from the retail space. Let me remind you of the fact that the same Pantaloon Retail has delivered a return of 20% earlier this year when we first initiated our buy call in this counter. And this 20% it has delivered against a 0.7% return from Nifty in the same time period, that is 3 months. This has been a very successful call for us. And yes, Pantaloon Retail has again come down to attractive levels, and also as the growth prospects look still stronger, we thought this is the right time to reinitiate a buy level, and so did we come up with this buy report on Pantaloon Retail. The main rationale behind picking this sector or the stock is that the organized retail penetration in the whole retail space in India is at very low levels of 5%. And this is in sharp contrast to the organized retail penetration levels in developed nations, which are at 75 to 80%. And due to this huge penetration level gap, there's a strong scope of growth for the organized retail sector in India. And this strong scope for growth in organized retail provides a strong opportunity for the players in the organized retail space. And Pantaloon Retail, being the leading retailer in this organized retail space, is best placed to capitalize on the strong growth opportunity in the organized retail sector. And why it is best placed, let us look at in deep. Pantaloon Retail, with an operations store space of 13.37 million square feet, expanded across 70 cities with over 1,000 stores, is the India's top retailer, catering to Indian public through different formats like Big Bazaar, Food Bazaar, Central, Brand Factory, and Home Retail, etc. Recently, it has realigned its business, by divesting its stake in non-retail divisions such as mall management, and the purpose of this realignment has been to focus, on its core retail business, to increase its focus on its core retail business and strengthen further the fast-growing retail business over the coming years. And it's also, targeted at improving efficiencies of the whole business. The company has planned a significant capacity expansion of 2.5 million to 3.5 million square feet of space every year for the next 3 years. And this huge capacity expansion means that strong rise in sales and therefore strong rise in top line over the coming years. During the recession time, that is during FY 2008-9, the sales of the company were significantly hurt. But from then there is a gradual rise in its sales. And if you see the healthy same-store sales growth over the past few quarters, that will indicate the same. Even in the latest quarter, that is September 30th, the three different formats of the company's business, that is lifestyle, value, and home retail, have recorded a decent rise in their same store sales growth at 22%, 13%, and 15% respectively. This indicates that the growth momentum of the company is very much intact, and we expect this number to increase significantly going forward. And also, the delayed festive season will further add up to the revenue significantly in the Q2 and Q3 of this fiscal. One more point is that the home business, which has been significantly hurt due to recession, has been seeing strong recovery in growth over the past few quarters, and that can be better explained by the 12% growth it recorded in FY 2009-10. Going forward, we expect this business to contribute significantly to the consolidated top line of Pantaloon Retail. Two important points which we want to emphasize are, the first one is, any positive development in terms of allowing FTA in multi-brand retail by the government will prove a very good positive for all the organized retail players, especially Pantaloon. This is because the funding in an aspect will become easier once FTA is allowed, and also the technically advanced processes and methods can be imported from the developed nations to India, and that would help these organized retail players in India very well, and especially Pantaloon. The other important point is that the leading retailers across the world like Tesco, Walmart, and Carrefour on an average have a share of 1.6% of the respective country's GDP. In such a scenario, Pantaloon, even though it is the leading retailer in India, organized retailer in India, It has just 0.1% share of India's GDP, which means strong opportunity and a strong opportunity for Pantaloon going forward, and not just a strong but a long growth story for Pantaloon ahead. If you look at the valuations of the company, it is trading at 3 times its FY 2009-10 book value and 54.2 times its FY 2011-12 EPS. These valuations may not be termed expensive for retail stocks considering their strong revenue visibility. And due to the above said positive factors, Pantaloon, with its expanding scale of operations, improving efficiencies, and robust growth prospects, looks attractive enough. And so we recommend you to buy this stock at the present levels for a target of rupees 535, which means 35% returns in a 10 to 12 month duration. Most importantly, Pantaloon Retail is such a stock which should necessarily be present in any long-term portfolio. Let us also clarify the recent issue where Pantaloon's name surfaced in the, regarding the bribe to loan scam. The issue is that Mr. Naresh Chopra, the LIC investment secretary, has allegedly leaked insider information about LIC's investment into a few firms, including Pantaloon Retail. This has nothing to do with the management of the company, not the operations of the company. So even the company denied any links with the scam. So we expect, this has to zero this issue to have zero effect on the operations of the company. So what we feel is the fundamentals are very much intact, and this particular decline in the share price due to the news is a very good buy opportunity for the investors with a longer term perspective. We have estimated the financials on a conservative basis. Even then, the financials look very robust, and as these are as shown in the frame. There are a few risks associated with the investment, and they are as follows. An economic slowdown similar to that of 2008 can have an adverse impact on the operations of the company. Any liquidity crunch also can affect the future funding prospects of the company, and any serious outcome from the housing loan bribery scam regarding Pantaloons linked to the scam can have an adverse impact on the company's operations. So, as said, previously, there are a lot of positive factors that prove that Pantaloon is the best place to capitalize on the huge growth opportunity in the organized retail space. So we advise and recommend the investors to buy the scrip at the present levels for a target of 535 for a 35% returns. Thank you all.